Welcome back, Alpha Hunters. Hope you guys are doing well. This is another good week on the market. We saw a little bit of a trend change kind of take place starting Wednesday morning. Basically just kind of continued all the way through today, Friday, almost into the close. We saw a little bit of selling come into the close towards the end of the day on Friday, but we'll take a look at that. But as you can see, we got here into the blue box. So I'll talk a little bit more about this and just kind of my outline kind of going forward over the next week or 2 weeks. Okay. But let's hop into what kind of went on during the week. Okay. But it was a short week. So Tuesday morning, first 45 minutes, we saw some continued selling, and that was pretty much the continuation from last Friday. We saw some pretty good selling kind of come in last Friday, just kind of pushed down the market as we thought the market was starting to bounce and turn around. Couldn't ever get over this blue line here, and just kind of saw some selling come in last Friday. So we saw some continuation of that early Tuesday, and then it just kind of consolidated then for the rest of Tuesday. Didn't really take out the highs or lows of that first 45 minutes. And then even early Wednesday just kind of chopped around a little bit and just kind of slowly started to grind higher. Once it got above this 395 area, which was kind of the resistance point for late Friday, kind of early and midday Tuesday. So once we kind of took out that, you saw us just kind of grind higher. And then we kind of retested into that level. Then early Thursday, kind of snapped back higher. Nice little sell off here midday on the market, and then it just kind of eventually kind of clawed its way back towards the highs on Thursday, kind of by the end of the day of that close. Friday, nice little gap up, got over the blue line, nice little gap up over that. Then just slowly grinded higher. Obviously, you can see getting into that blue boxes zone. So that's definitely the area where I was wanting to pick up some more bearish positions. So let's go ahead and take a look at that. Now, there's not much reason to take a look at a lot of the market just because so much of the market looks similar. We saw a little bit of outperformance this week coming from financial names. So that was actually kind of impressive. But I'll take a look at Apple because Apple continued to be extremely weak during the past 4-day trading session. So yeah, we'll take a look at that a little bit. But SPY getting into this blue box zone, I kind of am thinking we'll slowly grind higher here over the next few trading sessions, probably get to the 410 to 412 area. That is really the money spot for where I would like to be picking up bearish positions, is in that zone, like the 410 to 412 area on the SPY. So if we get there over this next week, I will definitely be picking up some more bearish positions. But if we don't get there, we kind of just go sideways, and then we wind up breaking down below the blue line. If we break down below the blue line or the blue line of this box, I will probably pick up bearish positions at that point in time also. So that is really what I'm thinking for this next week, or how I'm going to approach this next week. But definitely just let the market kind of come into this really sweet lower resistance area. And the reason why I'm kind of really thinking that 410, 412 area is really that's the low that we had 2 weeks ago before we saw this nice little run up. And then obviously everybody remembers the Fed day where we just kind of just dropped like a rock after they talked. So that's definitely what I'm going to be looking for going into this next week. If we get above 410, I'm going to start setting up the positions. And then once we get to about the 411, 412 area, I'll probably just start hitting the buttons, that'll be kind of my game plan going into this next week, and just kind of loading up on more put positions, more bearish positions. But you see how the past 3 days looks pretty good here on the SPY. Well, if we go to Apple, let's go over to Apple. The Apple doesn't really have that. They definitely broke down yesterday, Thursday, midday. If we go that intraday time period, you see this breakdown right here on AAPL. And if we look at the SPY, that's what this correlated to, okay? This same time frame. And Apple really broke down the market, and we were kind of seeing it like they weren't bouncing. They were just kind of down here consolidating and just kind of going back and forth between the SPY. You saw the SPY just start bouncing Tuesday, or not Tuesday, but Wednesday rather. And they started bouncing, and Apple didn't. Apple just kind of hung out and didn't really do too much. And then even on Thursday, it wasn't doing a whole lot. It didn't take out the previous day's high. And then so when it rolled over, it really snapped And that's what really kind of dropped the market there on Thursday midday, was at AAPL really kind of breaking down. But it's kind of bounced back pretty nicely. It's still been underperforming a lot of its peers like Microsoft, Google, Amazon, a lot of those big tech names that it's been compared to a lot over the past couple decades. So Apple's not still being itself as far as like the stock is going. And AAPL will probably continue to be an underperforming weight on the market, at least on the near term, until something changes, or the market either catches up with it roughly on the performance wise, or it catches down to the market, which I'm thinking it'll probably catch down to the market because I have bearish positions on it. So I didn't really want to look at too many stocks as they all look roughly the same, but Apple's the one that looks much more underperforming and a little bit more different than the rest of the market, as it's just been underperforming a lot over the past couple of weeks. So definitely keep your eye on Apple, because if Apple really starts rolling over here, if it doesn't really start to strongly bounce here, the market's going to have a very tough time continuing to break through these levels. So if Apple just consolidates in here in this zone roughly, and then just breaks down again, it's going to be really tough for the market to kind of go higher. So definitely be watching AAPL if you're playing the stock game currently. If we take a look at the Qs look pretty good. They'll probably also come into this little bottoming pattern that it had 2 weeks ago, and wouldn't expect too much of a breakout higher. I don't really know which one kind of gets there. Roughly the Qs are about 1.8% away. The SPYs are roughly about 1.2 or 3% away from that little bottoming area. So, maybe one of them gets there, the other one doesn't. Don't really know, not really sure, but only time will tell this next week. So then let's go ahead and take a look and see what the dollar did this week, because we are still seeing some of these other things that affect the stock market or stocks, continue to move in a direction that's bearish for stocks. We saw the dollar break out late last week, early this week, and now they just kind of had a nice little 3-day pullback kind of into that previous high area around the 108.6 area to 108.8 area. So nice little lower wick there. Expect a little bit more consolidation, probably continue pushing higher, probably towards the later part of next week. I wouldn't expect much more of a breakdown, as very nice breakdown Thursday, Friday, and then Friday you saw some buyers come right back in and snatch it up off of that previous resistance level that it had back in July. Now it's support level. People are buying off of it. So then let's take a look at the TNX, the 10-year rates, and you see the 10-year rates, they are still grinding higher. And if we look at even the 2-year interest rates, they are continuing to break out higher. This is not a bullish breakout for stocks, and fully expect if stocks continue to go higher and we see rates continue to tick up, we see the dollar, just bounce here off of this support line, and start to push back in the bullish direction here on the DXY. Expect the market, if the market continues to go bullish, I could see really quick selling eventually come back into the market and catch up to a lot of these kind of indicators that continue to move in the bearish direction for stocks at least, but they're moving bullishly. So as they continue to move higher, that's not going to be bullish for stocks. That will be bearish. So it just kind of depends on what the market does. And if we take a look at the inversion yield for the 10-year, 2-year, we're seeing it moving back down. I kind of was expecting it to consolidate kind of just in the level it's already established. I don't think it goes much, will probably go any lower than what it did back in August. I expect probably just to come back down a little bit, hang out, probably push up into the positive interest rate inversion yield territory, or not be as inverted as it has been really over the past like 2 months. So I'd expect probably a move back towards positive, maybe November, December. I would expect it to probably get in here and just kind of hang out for most of the rest of September, October. But, let's check out the GLD. The GLD just kind of hanging in there on the support level. Typically, you want to see it get to a support level or resistance level and bounce right off of it. The fact that it's kind of just hanging there doesn't really mean, that that's not looking too bullish. That's kind of what my mindset's thinking. So if we start just chopping lower and breaking down, slowly breaking down, it's just going to continue to to break down. So GLD or gold is not looking too bright right now. The HYG, high corporate bond yield, obviously looks like it has topped out. So this is very interesting. You know, that low that I was kind of talking about on the Qs and the SPY from 2 weeks ago, the HYG just got there Friday and basically retested right into it. So that'll be very interesting to see if the SPY and the Qs probably make this same kind of pattern happen here over the next day or two trading wise. And I would say definitely watch the HYG to see if it starts to trade back to the bearish side and, you know, the market's kind of just hanging in there or pushing bullish. I would definitely start to be a little bit more bearish on the stock market. So that's really all I got this week. There wasn't a whole lot kind of different than the market, which, you know, it's kind of a bummer, but it is what it is. Most of the market looks very similar to the S&P 500, to the Qs. One of the few things that looks very different from the market was AAPL, and it just looks a lot weaker than the market and the Qs. So with that being said, I hope you guys have a great weekend. And if you want to stop by the afternoon trading room, feel free to talk about some things, help answer your questions, and just check in and see what's going on with the market. Alrighty, take care, Alpha Hunters.